So one thing that we spend a lot of time thinking about is this idea that, you can own four types of assets, right? Stocks, bonds, currencies, commodities. And in this digital world, there should be digital stocks, bonds, currencies, and commodities, right? And so Bitcoin being probably the most attractive asset to date, right, in the currency bucket. And over time, as these other assets or digital assets get introduced, how does Wall Street interact with that, right? Because I think, to your point, they're more evolutionary than revolutionary.
Yes.
How do you see this playing out, and should, frankly, the crypto community trust Wall Street?
Well, that latter question is a whole can of worms. But how I think this is going to play out is, look, we all understand that natively digital assets can trade and settle instantly, and or in near real time. The technologists would correct me, but a lot faster than the T+2 days trade date plus 2 days settlement that we have now on Wall Street. And it's going to cut out a lot of the intermediaries that take cuts and create counterparty risk where it otherwise would not exist. So I actually think very much that the ICO craze, a lot of folks are thinking that there's a lot of scams, and of course there are, but there's something really important from a corporate finance perspective that comes out of that, which is that investors are rationally, in my opinion, willing to give up the traditional covenants and preferences that they're used to getting in investments in exchange for not having to deal with this crazy trading, clearing, and settlement infrastructure on Wall Street, which exposes them to all kinds of risks that they just don't need to be exposed to. So they get instant settlement with no counterparty risk if they are trading these utility tokens or security tokens.
How much of that is driven by human greed and just the idea that price will appreciate, and so
a lot of it,
right? Okay, so talk to me about, do you think that investors are actually making a rational trade-off in terms of, hey, I actually don't like that settlement system, and so therefore I'm willing to give up? Or do you think some of it is human greed, and by proxy that's what the trade-off that they're making?
I think it's the latter. I'm not sure that a lot of folks are necessarily going through that thought process that we just talked about. They instinctively understand that they outright own this asset. It's not an IOU from anyone, and therefore I'd rather own that. It's real property. It's something that I can maintain on my own, and if my broker dealer goes bust, I'm not stuck as an unsecured creditor to a leveraged institution like the customers of MF Global or Lehman Brothers were.
Absolutely.
Right? Where they end up taking a haircut, right? So I think a lot of people do intuitively understand that. How are they actually rationally making applying a probability and a loss severity to broker-dealer default when they buy securities? Probably not, but again, this is the wisdom of crowds, right? There it is intuitive, and I also do believe that this market has shown that the crowdfunding rules and the Jobs Act that Congress passed to help make crowdfunding a lot easier, they failed, and they failed because of the bureaucracy involved in raising capital. So what this market, I think, is doing is pushing, I hope, the policymakers towards, let's actually have a Jobs Act 2 that actually tears down even more of those bureaucratic barriers, because it's pretty clear that there is something special here in the structure of these ICOs, and let's actually help clarify the regulations. So far, the SEC has not been friendly to that, but there are folks on Congress who are.